I wasn't really following the stock market that much today, but then I saw there was this crazy news story that caused Alphabet, the parent company of Google, to see their stock drop nearly 9%. So today I'm going to break down exactly what happened, why the stock completely just sold off, and whether or not I still think Alphabet is an attractive buying opportunity, especially after this fall in stock price. All right, so what happened? The big story came from an Apple executive, Eddie Q, who runs the services segment of Apple. He was testifying today as a part of the ongoing lawsuit against Alphabet for antitrust enforcement. This is an ongoing case where a district court judge ruled that Google had illegally dominated advertising technology markets. And there wasn't really any breaking news around that part of the situation. But what really caused the stock to plummet was based on the comments he made during the testimony. He mentioned that searches using Google on their Safari web browser have declined for the first time in 22 years. And he attributed that to the increasing use of AI services. He also mentioned that Apple has had discussions with AI providers like Perplexity, OpenAI, and Anthropic, and quote, they are actively looking at bringing AI search options to Safari. Now, let's be clear, that does not mean that he's looking to get rid of Google as the default, but that is a potential risk in this lawsuit. If you didn't know, Google and Apple have an agreement where Google pays Apple around $20 billion annually to be the default search engine on Apple devices in the Safari browser. And it should be noted that Q said today he still believes Google should remain the default search option on Safari, saying that he has lost sleep over the possibility of losing the revenue share from the two companies' agreement. So both parties clearly still view this as a win-win agreement. However, we are at a phase in this lawsuit where they are looking for potential remedies and penalties against Alphabet. And one of the major focuses is how Alphabet pays Apple to become the default search engine on their platform. And if you've been reading a lot of the news about why Alphabet stock is falling today, you'll see the headlines like AI will replace search engines and Apple's looking for AI search alternatives. But the real story, in my opinion, is this risk around the Google and Apple partnership. And it's that reason why you also see Apple stock selling off, albeit not as much. In my opinion, it should be more. Other notable comments are that Q believes AI search providers will eventually replace traditional search engines like Google, saying, quote, I don't see how it doesn't happen. However, he also mentioned that AI search options are, quote, are just not good enough yet, but he is optimistic about their improvement in the coming year. So is Google dead? That's the big question, and that's what they're talking about on CNBC and all the stock market analysts. They're all saying that Google is dead. And do I agree with that? Not at all. In fact, I just used this as an opportunity to buy some more Alphabet stock. And over the past month during this April sell-off, I've built up a larger position, and it's now the fourth largest position in my long-term dividend growth stock portfolio. Now, first, let me talk about where I think the analysts are right about this being a negative for Google. As we analyze Alphabet stock, Google search is the cash cow. In the latest quarter, it reported $50.7 billion of revenue, which is more than half of their total revenue. And this is also incredibly high margin and is the bulk of their profits. So anything that adds to the narrative of Google search declining is a big negative. And this has been an ongoing narrative for the past year and probably 2 years since around ChatGPT launched. Now, the problem is that really hasn't shown up in any data or financials. This comment from the Apple executive is probably the most definitive negative storyline we've had around this. And just to give you some context here, Google search revenue increased 10% year over year. They just reported their latest quarter, and that went from $46.1 billion to $50.7 billion. And I made a video about 2 weeks ago going over Alphabet's latest earnings report, and they absolutely crushed it. The CEO mentioned that search saw continued strong growth in the quarter, boosted by engagement they're seeing with features like AI overviews, which now has 1.5 billion users a month. And this kind of gets to one of the key points that I don't like against this Google narrative. The argument makes sense in a world where Google stays the exact same product that it was a year or two ago. But the reality is that Google itself is one of the leading AI companies. You could argue they're possibly the best positioned AI company. And they are adding AI results into Google search, improving the product. So as we talk about these future AI search engines, Google itself is one of these future AI search engines. And when you use a product like Google Search, they often have AI overviews now at the top to answer your results, and that's available for free. But they also just add this new AI mode, which is just one of the tabs on Google search. And you can ask any question basically. And you might think about, oh, which company will probably be in the best position to monetize that potentially with advertising, given that it will be a free product. Oh, perhaps the company that already monetizes all these search results. That seems like a pretty logical conclusion. And by the way, one of the key use cases of AI internally in these businesses right now, whether it's an Alphabet or Meta, these large advertising companies use deep learning to better match ads to potential users. And that's another reason why you're seeing increases in revenue, because the ad matching is actually getting better. So I've talked about this quite a bit, but I think Alphabet stock is priced at a very attractive valuation. The PE ratio based on earnings over the trailing 12 months is now 16.75. And this is for one of the highest quality big tech companies in the world with an incredibly strong balance sheet and growing financials. As you can see, they are now significantly off their all-time high in stock price of $206. And they just reported a crazy great quarter in earnings per share. As you can see, the actual business of Google is growing and doing fantastic. And this growth is expected to continue well into the future, with analysts still projecting double-digit earnings per share growth in the coming years. In fiscal 2027, they're projected $11.69 in earnings per share, which is a 12.8 P ratio based on today's prices. Now, in my opinion, it does not make sense that one of the leading AI companies in the world with a fantastic business that's incredibly high margin and still growing would be trading at such a cheap valuation, but that's okay. Revenue per share is growing at a 19% 10-year compound annual growth rate. Free cash flow per share is growing at a 21% 10-year compound annual growth rate. This is slowing down though, because they are spending much more on capital expenditures in recent years. And we have talked about why that is many times on the channel. That's because they're investing so much in AI infrastructure. And the reality is there's only a few companies that are well capitalized enough to keep up this level of investment. It's Alphabet, it's Microsoft, it's Amazon. And then the only other leading players really are Elon Musk with XAI, because he can fund that, and OpenAI and ChatGPT. And they'll be able to fund and keep up with it. But they are in a weaker position in that they don't have that incredible core business, although ChatGPT is becoming a fantastic business. The reality is that Alphabet itself is one of the best AI companies in the world. And Google Search remains to be an incredibly powerful cash cow that actually is still growing. If you want to know how the company did in their latest quarter, I just made a full video going over that a couple weeks ago. I'll link it in the description and on the end screen. And I also just covered in my latest portfolio update video about how Alphabet is one of the top stocks I'm targeting and building a position in. So you should definitely go watch those if you want to learn more about my thesis on the video outside of this new Apple news. Now, I'll be completely honest in that this news report isn't good news for Alphabet, but I thought the stock was already attractively priced and falling off another 8%. The stock is incredibly attractive right now. Again, that's my opinion. You should do your own research before making any investing decisions. There are a number of risks around Alphabet's business, and frankly, I'm more concerned about the antitrust lawsuits and potential remedies that could come from that than I am the AI competition on that end of it. Because as I mentioned, I think Google itself is a fierce competitor in that space. And I am a big believer in AI being a huge growth driver long term. But today, the thing that made the stock go down 8%, the only real news from that is the Apple executive saying that in April, searches fell in the Safari browser. That's the only real news. Everything else is the exact same narrative about Google search being replaced by AI search in the coming years. That was something that was already dragging down the stock. And that is something we've been talking about a long time and will continue talking about for many years to come. I personally use this as an opportunity to buy more Alphabet stock today, and I look forward to it being a core position in my portfolio in the years to come. If you enjoyed this analysis, leave a like and subscribe to the channel, and I'll see you in the next one. Thanks for watching.